One of the most common requests I get from clients and from people who are thinking about becoming clients is for us to help explain to them what types of investment accounts they have and what the differences are. So today, that's what we're going to talk about. Hi, my name is Grant Ellis. I'm the founder and owner of Ellis Retirement Services. We help people across the country prepare for and enter and live in retirement. Let's get back to it. Let's paint the picture a little bit. You've been saving money for a long time in a lot of different places, and you're trying to figure out which pieces need to go where, what you're gonna do with them, what options you have, and what you can do as you think about near and enter retirement. And it can be really confusing, let's be honest. I always tell people, I don't know how to do your job, so why should you expect to understand how to do my job? You've got to give yourself some grace because this is confusing information. So today I want to break it down. I want to talk about investment accounts, the types there are, what makes them different from each other, when you might need them, and what you need to know. This might seem simple, but if you've ever looked at one of your investment statements and you have multiple accounts, you're probably thinking, what in the world is going on? So today, I'm gonna break it down for you. Let's start with the two major categories in terms of the types of investment accounts that exist. There are these two major umbrellas. You have retirement accounts and you have non-retirement accounts. I wanna keep things as simple as possible, and that's the primary thing you need to think through first in terms of your type of account, is whether it is retirement or non-retirement. That makes all the difference in the world in terms of what you can do with it, how you can plan for it, and whether or not you need it. And that's the general category, and you want to think through that first. And next, you want to get a little bit more specific and look at the type of account. And this is where it can really get confusing. And why is that? Well, there are many different types of investment accounts. There are probably 15 or more different types of investment accounts that you can choose from or your advisor can choose on your behalf. And it really gets confusing very quickly. So when you look at your statement, or if you're looking at the types of accounts, you're underneath that initial umbrella of retirement or non-retirement. The next thing you're gonna see is the type of account. And this is simply the vehicle that you are using. And it can be a 401k, an IRA as an example. These are ones that people have often heard of. 529 plans, UGMAs or UTMAs, Uniform Transfer to Minors Acts. There can be trust accounts. These are all of the different types of investment accounts that you can have. So to circle back, you've got the umbrella, whether the account is retirement or non-retirement, and I'll explain at the end why that is so important. And then underneath that, you have the actual type of account. Some of these accounts are only retirement, and some of them are only non-retirement. We'll get into more of that later, but that's the next thing you want to look at, is what type of account you're going to be using. In addition to the general category, retirement and non-retirement, and the type of account, whether it's an IRA, a Roth IRA, a 401k, a 529, or any of the other many types of accounts, the next thing you're going to want to understand is how the account is titled. We pay very close attention to how the account is titled, and what this means is a couple of different things. First, it is who is the owner and the benefactor of the account. If you own a Roth IRA, that Roth IRA is titled in your name. And you might look at your statement and it might seem very confusing, but the account owner is who the account is titled in. And this can look different in different ways. For some accounts, they can only have one owner. For instance, all retirement accounts, whether they are 401ks or any type of IRAs, can only have one owner. But other types of accounts can have one, two, or multiple owners, and they can also have different people who benefit from that account. It's a whole different discussion for a different day, but you want to make sure that you understand how your accounts are titled, and I'll explain in a little bit why that is also extremely important and why this all matters in the first place. So you've got your category of investment accounts, retirement or non-retirement, then you have the account type, 401k, Roth IRA, IRA, 529, any of the above, and then you have how the account is titled, which really means who owns it, who has control of it, and who benefits from it in certain circumstances. The next piece of this confusing account type puzzle is what we call custody. And this is where people get really confused, and I don't blame them one bit. It's extremely confusing. When we're talking about custody, we're talking about who is actually holding the account and holding the money in the investments. So if you think about it this way, all the things we talked about so far, the type, the titling, all of those different things, all of that can occur at any number of different investment companies. So you might have a Roth IRA at LPL with us. You might have a regular IRA at Schwab. You might have another taxable brokerage account at Fidelity. Most major investment companies can house or custody any types of accounts. So it gets really confusing because you're trying to figure out who's doing what. But if you get a statement, you're most likely going to have two different company names potentially on that statement. One is the investment advisor or the advisor that is helping you, providing you the services that you're paying for. For us, if you look at a statement, it's going to say Ellis Retirement Services. But then you're almost always also going to have the title of the company who is providing custody. Think of it like a bank who holds your checking or your savings account. They are simply the company that holds the account, holds the investments, and holds the money. Somebody has to do that. So if you look at your statement, and if you look either at the logo in the top right or left, it will tell you who that is. And sometimes if you can't find that, read the fine print. It always has to tell you who the custodian of your account is. And it's important because you want to make sure that you understand that the custodian can always change. Your different types of accounts, let's say that you have an IRA, they can move from one custodian to another. So if you don't like working with one, that's okay. You don't have to close the account, transfer everything out in cash and move it all over and start from scratch. You can actually have that account transferred what we call in kind, which means your investments stay as is, and it simply moves to a different custodian. It's one of the beautiful things about investment accounts is that you're not locked into anything when it comes to who holds your money. You can always transfer or change that if you don't like the entity that you're working with. The same goes for your financial advisor. If you don't like working with us, we don't want you to stay around. We encourage everyone to find an advisor they love working with. Now, we hope you love working with us, and we'll tell you how you can do that in a few minutes. But if you don't, we encourage you to find somebody else. So you want all the pieces of your investment account puzzle to be as flexible as possible so that in the event you're in a situation that you don't like, you can simply change and everything stays intact. So let's recap really briefly. I'm going to tell you the most important part of this entire thing, why it all matters so much. So first of all, going back, we've got the two different umbrella sections of investment accounts, retirement and non-retirement. And then we have the type of account. And there are a lot of them, so don't get confused. But then we also have the titling of the account. So if I have an IRA, it's going to say IRA for benefit of Grant Ellis. The titling account states who owns the account, who has control over it, and potentially who benefits from that account should something happen to the owner. In addition to the titling of the account, we also have custody, and this is just the company that holds the account, that holds the assets. So if you're going to open a new account, you're going to open it with a custodian. It might be managed by an investment advisor like myself or someone on my team, but the custodian is the one who is going to hold the money, hold the assets, hold the investments, and you're going to get statements on all of those things like that. Most major financial companies can provide custody for you, which is why it gets confusing because you're trying to figure out what's the difference in this custodian versus the other. Honestly, sometimes not a lot, sometimes quite a bit, and you want to rely on people who know that type of information to help you walk through and choose your custodian. One side note on that, most investment advisors, such as myself and the people on my team, we work with one or two custodians. So if you work with us, you automatically get the custodian that we work with. That's often how it works. And your taxes, your overall tax situation, both in the current year and for your lifetime, are directly impacted by the types of accounts that you have, how many of them you have, how they're titled and set up, and how you have them set up to transfer in the event that something happens to you. So it's not something where we're just saying, hey, this is really, really important. It's important because your entire tax situation in your current year and in lifetime is directly affected by all of this information. And as you can imagine, all of this is really, really confusing to some people. They're trying to figure out what the difference in custodians are, the difference in the types of accounts, how they should have things titled. If they get estate planning done and they get a trust set up, should they change the titling on accounts? The answer is usually yes, but that's a different discussion for a different day. So how do you navigate all of this and to ensure that you're handling it all in the right way? And I'm biased, but I feel that usually at some point in everyone's life, they hit a stage when they feel like all of these things are too complex to handle on their own. It's completely understandable. Again, no one's taught you this stuff. Why should we expect ourselves to understand things that we've not been taught? And when you hit that stage, you start to feel overwhelmed with all the options and you're confused, and maybe you even go down the rabbit hole in the internet and it confuses you even more. That's when I encourage people to reach out and connect with a financial advisor. We call ourselves family wealth planners because it's deeper than simply financial advice. We go into tax and estate and insurance and protection and investments, and it's just all of the things wrapped up in the one. Those are the things that can often make you feel overwhelmed and confused. As an example, all the different things that we've talked about today with the types of accounts and how you need to be using them. But to figure out how you need to be setting up your accounts, which accounts you need to have, how much money needs to be going into accounts at certain periods of time, how much money needs to be leaving accounts at certain periods of time, how it's going to impact your taxes, the amount of taxes that you pay, all of the streams of income that you have. It's all interconnected. And then the final two pieces of the puzzle, the most important aspect of all of this, which I want to make sure you understand, and then how do you know which accounts you need to use when, which is the obvious question you might have after going through all of this rigmarole, right? So let's get to the most important piece of all of this, and that is the taxation of it. The reason it matters so much whether an account is retirement or non-retirement, whether it's an UGMA, an UPMA, a 529, a trust account, an IRA, a Roth IRA, or any other number of accounts, is because the rules associated with each type and category of account affect how the money transfers to other people and how that money is taxed. And it's really, really important. You see me talk so much about taxes because it's arguably the number one thing that people don't think about that they should be thinking about more than anything else. And to figure that out, there's not a blanket answer. It's very specific for each person and for each family. So that's what I would encourage you, whether it's me or someone else, when you get to that stage and you feel like you need more, reach out to a qualified advisor. And what we do for our clients is we help lay all of this out. We talk about it in terms of puzzle pieces. We take all of the different moving pieces of your financial puzzle, we make sure that the right pieces are there, and then we help you optimize those pieces and move those pieces down the road to help you meet your goals in the future. So if you want to have a conversation about it, I'd love to connect with you. There's a link in the description. You can go to the website of ellisretirement.com and you can actually schedule time for us to talk via Zoom. I'd love to hear your story, figure out if we can help or not, and at least help you make that decision and get you where you need to be. So I hope this was helpful, not too overly confusing. If you have any questions at all, feel free to reach out. I'd love to hear from you.